We're joined in studio by Charles Booth, who's portfolio manager at Truffle Asset Management. Charles, for those who know your company but perhaps forgot the focus, or those who don't know, Truffle Asset Management, context, big picture?
David, we're a small boutique asset manager. In the retail space, we're currently offering two products. The one is the General Equity Fund, and the other one, which we're going to talk about tonight, is the Flexible Fund. The primary objective of the Flexible Fund is to try and achieve an equity-like return, but with quite a lot of emphasis on protecting the downside. So we have two primary strategies that we have in the fund. The first one is to move between cash and equity at the right time to preserve capital. And then the second strategy is to try and pick stocks that have defensive qualities that will give us a return but will somehow protect the downside.
Isn't that the ultimate dream of any investor?
Well, I guess so, but we try and do that, and so far I think we've been relatively happy with the returns that we have delivered. Just if we look at the overall strategy, if we go back a couple of weeks, we were running at about 80% equity. Wow. But as you know, equities have done quite well, and we thought that it was appropriate to start building up a bit of cash slowly. So we're now down to about 70, so we've taken some equities off the table. And if markets continue to perform well, I guess it's likely that we might continue to take even more off the table. But time will tell.
Well, let's pause there. We'll get on to a couple of your particular holdings, and we'll pick up on Steinhoff, which we were talking about a moment ago. We'll pick up from you. But Kevin, just first your response.
Charles, when you've moved out of equities, are you saying that, do you think the equity market, two questions, do you think the equity market is fundamentally expensive? Is that why you're moving out? Or is it a question of not being able to find the defensive qualities that you're looking for within the stocks you'd want to buy? And the second thing is, when you're moving out of equities, what are you doing with the funds? You're saying into cash. Is it literally cash, as in money market accounts, or you're going into other instruments like fixed interest?
Okay, well, let's try and take those. I guess the reason is that we are finding opportunities harder to find, and particularly the defensive opportunities. Markets have done quite well. We don't think that markets are, ridiculously overpriced. They're sort of in a broad range of fair value, but we just think that the downside is building. So the probability of capital loss is increasing. With regard to cash, primarily we are short term, but we do try and enhance the returns from simple cash. So we would use some strategies to get a slightly better return using a bit of credit, but that's not a main focus of the portfolio. The main focus is to invest in equities with some downside protection, and then to move between equities and cash.
You talk about markets, and domestic equities just under 60% of the holding totally, and offshore investments 16%.
Correct, yes. The biggest holding we have offshore is Imperial Tobacco. And that is also largely a function of its defensive qualities. We quite like British American tobacco, which we think is reasonably priced here in the South African market. But if we look at the fundamentals of Imperial Tobacco, we find that it's even better valued. So we would prefer Imperial Tobacco over British American tobacco, and that's why we're holding it. The tobacco industry, without getting into the morality of cigarette smoking, is a very defensive industry. It's got great stability of earnings. It's got steady growth as they reduce their costs. So it's just a nice industry to be in as an investor.
All the smuggled cigarettes, which one is led to believe?
Look, that's always a problem. Yeah. It's always a problem. And I think that's one of the reasons why the tax can't get too excessive, because the higher the tax, the greater the incentive to smuggle. So there will always be some sort of arbitrage between the two.
I've never met someone who smoked less because of the price. You either do or you don't. Let's just move to Steinhoff, because we were talking about it before in the context of the acquisition of JD Group, which I think has now been approved, and Sid Vianella was talking about it. Yes. It's a big one for you.
It certainly is, and it's one that we have been keen on for quite some time, and frankly enjoyed the ride, because it's been quite a good performer recently, but we still think that there's more to go, because the market, I don't think, fully appreciates the benefits that are coming through from Conforama, which is their offshore operation. I mean, JD Group is really not a key asset in the Steinhoff Group. It's more the overseas assets. There's plenty of cost benefits coming through as that acquisition is bolted onto the existing Steinhoff operations in terms of purchasing power, and supply chain savings,
So
etc.
more benefit for JD Group, in fact, in that sense.
Probably yes. And then we also think that there's a little bit of a sweetener coming down the line if the group restructures in terms of listing the offshore operation, which we think will result in perhaps a fairer price for the asset.
Charles, are you anyway concerned about Steinhoff being mainly operating in Europe, and obviously the European environment hasn't been that great? Is it something they're coping with?
Well, I mean, clearly it's a concern, but in some respects you could almost argue that it's an advantage, because what we find is happening in Europe is that the smaller players are falling by the wayside. So Steinhoff are, in a very calculating way, sort of gobbling up their competition. So I think that they're going to ride through the cycle quite well. But look, business conditions are tough. There's no question about it. And they could be earning more money if things were stronger. But it's not necessarily bad.
Let's move to Old Mutual, which I think a few days ago, a nice positive report in the newspaper about their results. And they'd gone through some tough times with the Scandia investment, which verged on a scandal at some point.
That's right. I mean, correct. I mean, really, the Old Mutual story is just cleaning up the show after some very, very unwise acquisitions. So what we've seen over the last few years is cleaning up their United States operation, which is now no longer a major focus for the group. We've seen them selling their Scandinavian assets in Scandia, and it seems like the group is now getting back to its core business. So it's an attractive story. They're reducing their debt. There could be some special dividends, and it's a good
Do you think
story.
they'll go as far as to bring the head office back into South Africa and kind of make that statement about South Africa being at the centre?
Kevin, I wouldn't think so, but I would say you can't exclude it. But
do you mean bring the head office back but not a listing?
Back to Cape Town?
Yeah.
Yes. To be honest, I haven't really applied my mind to that question, but I would think not, but who knows?
And then their strategy beyond that, I mean, what we've seen so far is, as you say, a cleaning up of the business, which has obviously been hugely beneficial. But their strategy going forward is, how do you think they play that? Does it become more of an emerging market focus as opposed to what they had previously?
Well, I mean, clearly it is, because South Africa is now a very important part of the business.